Welcome to TradeTheMBI.com. This is John. This report is for the 9th of January. Tuesday was, well, kind of benign given the big ranges that we've seen prior to this, but we were coming up against this big 50% Fibonacci line right here that often causes a little bit of resistance. It was funny because we were watching it intraday, and I know on the Skype chat I posted about it for you that, hey, as soon as we get there, and push above, if you come back to it, it's going to be a little more interesting. And sure enough, that was the big sell-off that we had intraday. Of course, still finishing right at the fit. I mean, they do a beautiful job of this. And then, of course, we're starting right from the 50, moving higher. We got still 2,600 is the next one. Usually when you get a little bit over the 25, 80, 85 range, the pull to the even 26 is going to be pretty strong. So I would keep that one in mind. We are seeing, quite a few negatives here. We've got a bigger rejection of the green to cyan. So shorts have activated in this. We've dropped below the 7.5 on the steel, starting out the morning here. And now you have green below the red. Now, we also are moving into a new zone with the red DOC. That is going to provide a lot of support. Fund money for the month has already done its thing. That was, really what drove our push. And it caught a lot of people upside down in this situation. Okay, let's do this a little, there we go, get that right where we want it. So the 4th is about when we expected that fund money starting to flow, and then boom, it just continued. And you get the residual effect of it until shorts get interested, in which case you're right at a key point where they'll want to get interested. I would think that even another set gets interested right at the 26 if they can see a little push up to it. Justifications, well, a lot of people have varying views as to where things are at status-wise, and I think that's what makes it interesting, because it's always a fear trade that really pushes things. The more people are afraid about the economy, and that the higher the market should rise, simply because the contrarian aspect of it, just how it tends to work. But NASDAQ and S&P right on target with each other, doing exactly the same thing. This rising euro is certainly helping it. No real justification for the euro or at least dollar devaluation. Everything for the U.S. economy is going in the right direction. The European economy is not so much. So, but that's really not much to do with why the euro trade is what it is. It's definitely important for them to keep the euro slightly elevated. It certainly helps with trade and everything else from the U.S. standpoint. And gold still holding up at decent levels. You still have cyan under red without any change whatsoever. So not even a factor. Turning to the intraday. So I got really excited. We started out early by momentum that drove everything up, and then we started to get. Anytime you start seeing the spikes, this is what I start to look for. So when you start to see these spikes going, it's like, okay, hey, I got the move that's going right about here. Oh, look at that. Yeah, my histogram is underneath. So theoretically, you could take even that setup. Here's what you really don't like about it. The fact that you didn't have the steel crossing above and then back below like you do right over here. The only problem is it does it just like instantaneously and on rising shakeout with green above, and then finally you get the orange crossover, steel crossing below cyan. You see how that just forms that beautiful lovely opening of the mouth. The green actually in this case bar later before it actually crosses the line. I tend to get it a little early on these, but that's just because I'm used to seeing and I can identify when we're likely to make that lower shakeout. We're already at a lower shakeout in this particular case. Yes, it could rise a few more bars, but I already knew we were going to have higher highs on lower shakeout, so there was going to be some level of retrace. And what I look at from this standpoint is, hey, I've got a positive extreme, so at least I know that I'm going to get a return back down to that. Now you can still deviate. We've seen plenty of that, particularly in these recent runs. But even waiting to the ABM, not a problem, because it continues to fades down. We get the cross of the steel, which is the warning sign, right at the 50, and I put that one in there because it's so important to follow that daily. just to have it on the chart, just to see it. It's like, okay, you know, I'm going to take some at the 50, and sure enough, we continue the dip. And once you get the steel crossing the orange, you know it's just a matter of time before you get the short snake, which is just the steel higher, well, I mean, I'm sorry, the bullish snake, steel higher, orange below, the opposite, orange above, steel below, with the tongue of the cyan in the middle is a short snake, which happened just, well, right there at that little marker. And guess what? Right at the 50%. As I warned, once we got above it, because I put that on just specifically for you guys, the Skype chat, to let you know, hey, when this dips back to the 50% and goes below, look out, because there's going to be a significant amount of selling. And sure enough, there was. I mean, they drove it all the way from the plus 20 something all the way back to zero. Pretty straight down too. I mean, once you get into this negative 13 area, though, this is interesting because while we're here, show you the work that we're doing with that 50K chart. We're going to have the setups that at the bottom ranges will convert. I'm almost finished with that, which will then get converted to the strategies. You know, speaking of which, I don't think we even talked about this one from a daily standpoint. We had the buy signal here from an ATR bust. You don't see this very often. In fact, it's been quite a while. When the ATR, the average true range, increases to a certain degree, the program takes that into account so that it doesn't get stopped out of it in the same direction where you might have much smaller ranges with these, and it's break even. I don't know if that got us to new equity highs. Let's take a look real quick over here. Good performance. Ooh, right at the edge of it. 1599, and well, I think we're almost about tied with it. You know, interesting, ever since the quantitative easing started, it was like right over here, you had that initial push that drove things up, and then it went into super flat mode where we just had long drawn runs. And this program really looks for the normal up and down of the market. As we start to return back to that, I think that it's going to start to perform very well. So we've seen this nice up spike here as the Fed has sort of ended its overly aggressive input. You know, 74% win rate, 2.0 profit factor, all good, all good. But we deviated from what we were talking about, which was this, and the fact that we're making some primary adjustments. Now, of course, when we get the gold, orange candles right here, we know that we're looking for return back down to that open, and a dip back below. So it does the same thing. When you dip back down below, return right back up to the open. In this particular case, nice when you get this secondary buy signal down here at this bottom. Yeah, you see an EBM reset, but ideally this is really nice because you've seen the improvement of the DOC, so you're getting a rise here. You've gone from a dip below the red line, which needs the lows to be retouched. They get retouched right here on the higher extreme readings, and when you get the next set of lows, you're still not dipping below the red line, which means, hey, you got buyers that are buying up into this dip, and that's what they need, that extra liquidity, and boom, bought that back up, and then we ended up with gold at even higher. And that's where we get the, P2s, and this would even be, an improvement. Of course, we're so far below negative 13.5. It's hard to get it into the P3 range, which has got to be well up here between the 0 and negative 7, which was over here. But still, nice run. And then we ended up, once you got back to that 50%, hit a little bit of resistance, and then finally broke about above it, and then coming back now becomes support. And now we're a little bit, a little heavy here, just yellow dots, nothing super positive extreme, but those tend to get filled in the pre-market. And we now have a new number that they'll be reaching for, 87 start of market if they don't already get there before the market opens. That'll be the target range. So keep an eye out for that. And again, I will keep posting any, special charts. You can see how clean this was, though. I mean, there it is. The steel crosses over. Interesting, the steel crossed over while rising, but you had the orange rising, green is below red, and red is right at the top off. Even if you waited to the next bar to get your confirmation, you already have lower red right there. Even though the cyan and green kind of closed together, didn't take much for that breakdown to occur. And now you got a little bit of a closing of the mount that should provide some support right around the 61, and that we'll see if the shakeout returns back from the 0. All in all, good stuff. As always, though, trade well, and we'll talk again later.